Our next story is about the U.S. banking crisis. It seems to be spreading. Yesterday, regional banks in America suffered more losses. Their stocks were in the red. They plunged by more than 10%. Investors are pulling out their money. They fear that more banks are on the brink of collapse. Two of them are in the headlines. PacWest and Western Alliance. They're both mid-sized banks. Both are said to be in trouble, and both are exploring their options, including a potential sale. This week began with the sale of First Republic. The bank was in distress. It was sold to JP Morgan. Now it appears that PacWest and Western Alliance could be headed in the same direction. PacWest is in particularly bad shape. Yesterday, its shares dropped by more than 50%, and a 50% drop is a clear red flag. This year has been bad for the bank. In all, it has lost more than 85% of its stock value, which means losses for investors, millions of dollars in losses, and the bleeding is still on. So PacWest is being forced to consider radical moves. The bank issued a statement, I'm quoting from it. Recently, the company has been approached by several potential partners and investors. Discussions are ongoing. The company will continue to evaluate all options to maximize shareholder value. What does this mean? It means that all options are on the table. That's what the bank is saying. It could sell its assets, it could bring in an investor, it could even consider an all-out sale. And these are extreme measures, and they tell you how big the crisis is. In fact, all the banks that are in trouble face the same problem, the problem of liquidity. There's a cash crunch. They don't have money. Where did the money go? Ask the U.S. Central Bank. They call it the Federal Reserve. In recent months, the Fed has hiked interest rates, and that hike has punched a hole in the books of American banks. How did that happen? Well, these banks held many government bonds. With the rate hikes, the value of those bonds has declined. So now the banks are in trouble. And the Fed is still hiking interest rates. Yesterday, it announced another hike, the 10th one since March 2022. You know what this means for American banks? It means more pain. But the Fed chairman is not worried. He claims the U.S. banking system is resilient.
Let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient. We will continue to monitor conditions in the sector. We're committed to learning the right lessons from this episode, and will work to prevent events like these from happening again.
The banking system is sound and resilient, he says. If that's the case, then why are banks collapsing? PacWest is exploring options, and Western Alliance is braving a storm. Yesterday, its stock price plunged by 62%. This is after a report came out that said the bank is exploring a potential sale, and that Western Alliance has hired advisors to explore options. The report also said that these deliberations are at an early stage. So the stocks began falling. Western Alliance rushed into damage control mode. It denied the report. It called it, quote-unquote, categorically false. The stock recovered, but only partially, a gain of 32%. The bank also released its deposit numbers. They're holding steady for now, but investors are increasingly wary. There are growing calls for regulatory intervention. Wall Street executives and bank analysts want the Federal Reserve to intervene. They want the central bank to take more steps to ensure more liquidity for the banks. But will that really help? And will that be enough, considering the fact that the Fed's own credibility is being questioned? The Fed chairman made an admission this week, and he said that the bank had made some mistakes.
I fully recognize that we made mistakes. I think we've learned some new things as well, and we need to do better. And as I mentioned, I thought the report was unflinching and appropriately so. I welcome it, and I agree with and will support those recommendations. And I do feel that I'm personally accountable to do what I can to foster measures that will address the problems.
So the Fed made mistakes, and American banks paid the price for it. In the last 2 months, 3 banks have failed: Silicon Valley, Signature Bank, and First Republic Bank. Their combined asset base was nearly $550 billion, which is not a small amount. Yet these banks could not survive. If this list grows, the U.S. Fed will face some tough questions.